here a little bit. Has this recent market pullback knocked tech off course or not?
Mike, it's still right to be in technology in the short run. I just think you have to be a little bit more selective at what you buy in the stage of the rally. So a lot depends on your time frame. You look at charts of XLK, both the declines in May and also in late July really failed to breach the longer-term trends in XLK and even the equal weight tech. So really, it's still a case of buying dips. You look at a longer-term chart, though, on XLK, that changes things a little bit. You are starting to see some real momentum waning at this recent push to new highs this year compared to last. So that really is more of a warning sign more than really a sell. My thinking is for most trend followers, it is proper to wait till XLK gets under 75 and until you really decide to get rid of it. And near term, you could still make some upward progress to 82 to 84. So from a tactical perspective, it's right to be long. Enterprise software stands out as better than semis and hardware to me, but really watch for a break of 75. That would change things.
All right, so still a little bit of slack in that leash, I guess, by that analysis. Mark Tepper, where within tech makes sense? I mean, as Mark Newton kind of alluded to, the technology sector right now is basically Apple, semis, and software largely.
Right, yeah. So first things first, I do believe the bull market's still intact, but when you're in the later innings, we have to be more defensive. And we love the tech sector, we're overweight. But hands down, we prefer software over semis, just like Mark does. So that really gives us a more defensive posture. Why is that? Well, software revenues are higher margin, and a lot of them are recurring. So you really have some downside protection when the economy slows. One of my favorite names here is Salesforce. They report tomorrow. Quarter after quarter, they execute, but the stock price really hasn't moved. It's up only 7% this year. The concern has been that if the economy slows, enterprise spending gets cut. But a CRM program is really the engine behind a business. It's the last expense a business would cut. So we're overweight tech, but we do agree, stick with software over semis.
All right, Mark and Mark, thank you very much, guys. Appreciate it. And for more Trading Nation, head to our website or follow us on Twitter at Trading Nation. And back over to you, Tyler.
All right, thank you very much, Mike. Ahead on Power Lunch, President Trump says the economy is strong, but some on Wall Street are raising the alarm bells. We will debate the recession obsession. Plus, Tilray up in smoke. Shares down a whopping 90% from their September highs. And one top analyst explains what's wrong with this stock. And a Hollywood breakup. Disney's box office powerhouse Marvel leaves one beloved superhero far from home. Power Lunch will be right back.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
Many people say don't fight the Fed, but that doesn't mean you have to fear the Fed. If you're a long-term investor, don't let a Fed announcement derail your long-term investing plan. However, if you're a short-term trader, you may want to consider waiting until after a Fed announcement before taking on any new positions. I'm Randy Frederick, and Schwab is the better place for traders.
So Schwab taught me about four-legged option strategies.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
In a world where everyone's on the move, streaming monster movies and mega box sets will gobble up the gigabytes on your mobile in no time. What you need is more data. Tons of it. Unlimited data on a new SIM-only deal from Carphone Warehouse. Unlimited data from a minuscule £23 a month. You want the world? You got it, baby. Pull a switcheroo at Carphone Warehouse. Vodafone 12-month contracts only ends 31st of December. T's and C's apply.
Oh, I found one of our new Vauxhall Griffin editions.
Yes. What comes as standard?
Standard? Well, alloy wheels, sat-nav, aircon, DAB radio, Bluetooth, smartphone projection, and USB connection.
Wow. Is that everything?
Sorry, forgot the colour touchscreen.
Buy a new Griffin edition, Adam, Astra, Corsa, or Mocha X Plus, and get a whole host of features as standard. The Griffin Edition range. All Griffin, no bull. Visit your nearest retailer now. Vauxhall, British brand since 1903. Participating retailers only. Limited units while stocks last.
It had been 22 years since Dan and Tom last met, since they shared a desk in maths and played football together at lunchtime. 22 years with nothing more than a few Christmas cards and an online friend request to show for it. A 21st century eulogy for the loss of a once great friendship. Until a chance meeting outside the corner shop. On a morning they both decided to ditch the car and walk instead. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Haier, Bosch and Beko with finance options available. AO.com, the online electrical store. AO! Let's go! Credit is subject to status. Must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
Oh no. 1 kebab, 4 cabs, 3 karaoke booths.
But really? You can't always recall what you spent on a night out. But you could map the location of those transactions on our mobile banking app. Feel in control every day. Lloyds Bank, by your side. Not available for every transaction. T's and C's apply.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. The Trump administration is rolling out a plan it says will allow the government to detain families crossing the southern border indefinitely, rather than the current practice of releasing them within 20 days.
The new rule establishes a high national standard for care of children and families in custody, allows the government to keep families together for fair and expeditious immigration proceedings, restores integrity to our immigration system, and eliminates the incentive for children to be used or exploited to enter the United States.
Dozens of black-clad protesters wearing protective riot gear gathering around a train station in Hong Kong today. They aimed laser pointers at police and chanted, "Liberate Hong Kong." About 50 riot police arrived to disperse them. 2 NASA astronauts went on a spacewalk outside the International Space Station today. It was a working trip to install a docking adapter on the station. It was expected to last about 6.5 hours. You are up to date. That's the news update this hour. Melissa, back to you.
All right, Sue, thank you. Want to check on the markets right now, and they are holding steady on to gains. This after the release of the FOMC minutes from the last meeting. The Dow is up by a full percentage point. S&P 500 up by 0.8%. NASDAQ is higher by 0.9. No surprise, consumer discretionary, the leading sector today. We should also note that the spread, the 210 spread, is holding in there. It's down to 1 basis point, and that's something to watch. It's interesting that the markets are able to hold on to these gains despite this narrowing of the spread. Meantime, the oil market closing for the day. Let's get to Rahel Solomon at the CNBC Commodity Desk. Rahel.
Hi, Melissa. So a choppy trading session for U.S. crude prices, with WTI erasing nearly all of its earlier gains, settling right now closer to $55.67 a barrel. Brent's still up, though, closing around $60.26 a barrel, making this now its 4th straight day of gains. Now, WTI had been up more than 1%, but then prices paired gains after data from the EIA showed a bigger than expected rise in U.S. fuel inventories last week. So the demand picture is still looking optimistic as trade tensions start to ease, but it's really the supply that's painting a somewhat mixed picture. Kelly, I'll send it back to you.
Rahel, thank you very much. Now it's time for a recession rumble. The New York Times releasing a scathing editorial arguing that President Trump is pushing the economy to the brink of collapse. The Wall Street Journal, meantime, publishing an op-ed that says recession fears are overblown, and it's the exact debate that all of Wall Street is having. So joining us now are the authors behind these 2 pieces. Benjamin Applebaum is Washington correspondent for the New York Times, and John Hartley is Republican economic policy advisor and co-author of the Journal's op-ed. And it's great to have you both here. Benjamin, I'll begin with you. Tell us what you think is happening with the economy right now.
I don't think that the economy is in recession right now, and I don't think it's a sure thing that we're headed into a recession, but there is a narrative that could take us there, and it basically has to do with trade. These rising trade tensions create uncertainty in the economy. We've seen businesses holding back on investment, expressing concerns about the prospect for global growth. If that takes hold and President Trump keeps pushing in that direction as hard as he can, that's when you have the chance of a downturn, is that people lose confidence, they start pulling back more dramatically, and that thing starts to build on itself.
John, why don't you see that playing itself out into a downturn?
Well, the macro fundamentals are strong. GDP continues to chug along above 2% GDP growth. Unemployment rate still below 4%. The consumer data is strong. Real wage growth is near decade all-time highs. And on top of that, you don't see any big uptick in unemployment claims. And until you see something like that, I wouldn't be particularly concerned. We've seen CapEx like short recessions in the past without there being major economic downturns. We've seen that in the mid-2000s. We've seen that in the 90s as well. Now, the question is whether that's a sustained phenomenon or not. And I agree with Benny that certainly trade and global growth, I would say more so, has weighed on business investment. But I think also you have to consider the fact that President Trump and his economic team followed this closely. Earlier this week, they've discussed potentially further lowering corporate rates. And I think that if it does continue to meaningfully get worse, I couldn't think of a better policy prescription to shore up business investment, which, if you remember, in early 2018, there was a massive CapEx boom following the Tax Cuts and Jobs Act. And I think that had a lot to do with lowering the corporate rate from 35% down to 21%, where it is now.
Binya, you do want to respond to that and to the idea that if it's going to spark a broader downturn as you see it, we're likely to see the president step in with some countermeasure.
Yeah, I think that's actually a really key point, because the president is actually very constrained in his ability to do anything. You know, when the president first came into office, he had a Republican Congress. He was able to push through the tax cuts he wanted. Maybe they had a positive effect for a while, but even if he wanted to do that again right now, he would need to convince congressional Democrats to go along with that plan. One has to put lower chances on his odds of doing that. It's not at all clear that this White House has the ability to respond meaningfully to a souring in the economy.
You know, as I listen to both of you, Benjamin and Mr. Hartley, I sense that, Benjamin, you are looking forward to the potential effects of tariffs on the U.S. and global economy. And John, you seem to be focused more immediately on the numbers as they stand today and as you look backward here. Am I understanding the difference in your views? And let me ask each of you then to respond to the other. Benjamin, what do you say to John when he points out the compelling numbers that he does, though I think some would quibble whether there was really a capital spending boom in 2018? And John, how do you respond to Benjamin, who says, hey, wait a minute, the current numbers may not be all that bad, but what may happen as a result of tariffs may indeed be. So, Ben, you go first.
So, yeah, I agree that the economy right now has a lot of things going for it. We're still seeing relatively strong growth. We're still seeing job growth. I personally don't subscribe to the view that the tax cuts made a meaningful difference, but, you know, I do think that a lot of things look pretty good right now. What I would say, however, is that I think we are starting to see signs of weakness. I think that we are starting to see consumers feeling some pain from the tariffs. And it is true, certainly, that it's only if things get worse that we end up in a recession. But where we are right now is clearly not a recession. And I agree with John that the fundamentals at the moment are not all that bad. It is a question of whether the current trajectory continues to deteriorate. That's
so Benjamin,
how we end up
John, Benjamin kind of concedes a lot of your points. What do you say to him directly about the potential that tariffs might have to slow things down, derail what is a pretty nice picture right now?
Well, I think first and foremost, I think it's important to remember that one, you know, the president is clearly, and his economic team follows closely, and especially you know, with an election happening next year, would hate to see a recession happen.
You think?
There's actually there's only been two there's really been two major causes of recession in the post-war era, and that are things like financial imbalances, things like housing market collapses, or tech bubbles. Or Fed policy mistakes. And I don't think, you know, potentially there's some frothiness in the corporate credit market, but it doesn't really seem to be systemic. And then on the Fed policy side of things, I think, you know, raising rates to 2.5%, where we were earlier this year, is not anything like what the Volcker Fed did in the 80s to fight inflation. And you're already seeing now the Fed is already providing some sort of accommodation, cutting rates by 25 basis points last month, and the market expects another 25 basis point cut in October, at least with a 70% chance of going to the Fed funds futures market.
Correct me if I'm wrong. I didn't in that very clear answer hear you mention tariffs at all.
Well, and I will just add to that. You know, I do think that it's important to recognize that the president actually just delayed the latest 10% tariffs on an additional $300 billion of goods from September 1st to December 15th. So I don't think that the president is tone deaf or his economic team is tone deaf in any way. And I think you've seen in the past that farmers that have been impacted by tariffs have received support from the president. So I don't think that right now it's fully escalated to the point where it's something that I would be too concerned about, and certainly given the election.
So just so I'm understanding you, and I'm looking for clarity. I'm not meaning to challenge your point. It sounds like you're saying that if the tariffs start to bite, don't worry so much because the president and his team will take swift steps to ensure that the bite is mitigated. Am I understanding you correctly?
That's right. There's been reports earlier this week that the president's economic team have considered cutting the payroll tax. They're potentially considering cutting the corporate rate. I think that would probably be the better way to shore up business confidence. And I think, too, if economic data did meaningfully get worse, I think that congressional Democrats and Speaker Pelosi would actually want to work with the president in that regard. And I think it's also important to remember that you've got things on the docket this autumn, like the USMCA, which the Democrats seem somewhat divided on. But I think passing that actually may be a sign of good faith in trying to shore up more business confidence in the U.S. and some good bipartisan policymaking.
Thank you both, Benjamin Applebaum and John Hartley. This is the debate at the heart of the market.
And coming up on the tasting menu, Spider-Man leaves the web, a milestone for women at work, and a kicker story about a kicker. Stay with Power Lunch.
The Bond Report.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
Phew! Currys PC World Mega Deals are hot stuff. You can save up to £150 on Samsung fridge freezers, all with a soothing 5-year guarantee. Starting from just $379 for the RB29. Or upgrade to an American-style model with £150 off the RS8000. And chill in the heat with its water and ice dispenser. A hot mega deal for a cool $999 at Currys PC World.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
The sun gently fell below the horizon. Rays of pure gold filled the sky, illuminating the towering structures of the London skyline. What else could Jane do but gaze in awe? She was but a silhouette upon a hill, wrapped up in a spectacle so perfect. No words, oil paintings, or smartphone filters could do it justice. She savoured it. Before hopping back on her bike and riding off, she had to finish her commute home. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
If your old faithful fridge freezer is broken or on the blink again, relax. At AO, we have a huge range jam-packed with the latest technology to keep your weekly favourites fresher than ever. Plus, there's great deals on top brands like Haier, Bosch and Beko with finance options available. AO.com, the online electrical store. AO! Let's go! Credit is subject to status. Must be over 18. AO Retail Limited is a broker and not a lender. Credit is provided by Secure Trust Bank PLC, trading as V12 Retail Finance.
To advertise the McCafe range from McDonald's, we could use a deep voiceover.
Like this. They describe our coffee using words like robust and intense, but said very slowly and with an echo. Robust, robust, robust. Intense, intense, intense.
We could do all that.
But we don't. What we do is use freshly ground Arabica beans and organic milk. McCafe. Great tasting coffee. Simple.
SUVs, as you probably know, have been the driving force for the auto industry in recent years, but could the trend be starting to stall? Phil LeBeau joins us now from Chicago. This would surprise me, Phil.
You know, Tyler, the trend of demand, of people wanting to drive an SUV or a crossover utility vehicle, that's not slowing down. That continues. What's happening is that automakers have pumped out so many of these models that sales per model, in other words, let's take like the Jeep Wrangler as an example, not a definitive one, but as one example. The number of sales per model is declining from here. That means for automakers, it's going to be a lot tougher to boost the profitability of these vehicles. Also, keep in mind, we're in a slowing sales market.
It's adding additional pressure, and I think that pressure is certainly causing some inventory issues and causing manufacturers to make some tough decisions, and that is trimming production as well as looking at some changes in future model rollouts and options.
GM is one of those automakers that is going to be trimming production. If you take a look at the Chevy Equinox, which they build in 3 shifts down in Mexico, well, now they've said we're not going to build as many. It doesn't mean they're getting away from the Equinox, but they're just not going to have a glut of them in dealerships, which is what you want to see an automaker do. Ford is another company. They've got the new Ford Edge coming out, which they build at their plant in Kentucky, and they've decided that they're going to have less production than many people originally thought. Bottom line is this, guys. There are so many more of these models for sale that incentives are rising because people can go around and say, well, if I don't buy that one, I'll buy this one. And what's the best deal that's out there? This is going to continue over the next couple of years.
They all look the same. You know, I drive down
That's another issue.
I'm telling you,
That's another issue.
Or I look in people's driveways and one's a Mercedes and one's a Toyota. I'm telling you, they all look the same.
Very few stand out. Now, there are a few brands that do stand out, Kelly. Range Rover is one of those on the luxury end that does stand out. I know people may have comments about it, but that stands out. And the other one, when you look at the mass market, the Jeep models. Jeep is still an incredibly strong brand. Those guys stand out. But you look at a lot of the other ones, it's a mishmash. And people cannot tell the difference between a lot of them.
It's a commodity. Phil, thank you. Phil LeBeau.
You bet.
Here's a taste of some of the other stories we were watching for you today. The friendly neighborhood Spider-Man is leaving Marvel. Deadline reports that Disney and Sony couldn't reach an agreement that would have given new terms to a co-financing stake between the two studios. The decision will effectively remove Spider-Man from the Marvel universe, though 2 more films are reportedly still planned. This comes after Sony had its highest grossing film ever with Spider-Man, Far From Home. Kelly, surprisingly, is an expert on this very topic.
How does this work? I mean, I don't know.
Yes.
Evidently, because so Marvel, after it went bankrupt in 1998, Ike Perlman came in, bought some of the assets, and sold the rights to Spider-Man to Sony at the time for $7 million. And Sony turned down the rights to the rest of them. So Sony's owned the rights to Spider-Man. Disney ultimately comes in and owns Marvel.
Buys Marvel.
It buys Marvel. So they've had this deal they've worked out for some of the movies, as I understand it, lately, where while Disney would take the cost of it, they'd only get 5% of the profits. So they wanted for the movies going forward to say, we'll do half the cost. We want half the profits now. Sony balked at that, and Disney has walked away and said, fine, you keep the Spider-Man property. We're going to take Marvel and the producers behind it and focus on TV content and content for Disney+. I think, but I will be corrected by those in the Marvel universe who know much better than I. Meantime, another major milestone in the workforce. Women will make up most of the college-educated workforce for the first time this year. They make up 46% of the whole labor force, but they outnumber men in terms of the college-educated labor pool. And it's made companies rethink how they attract top talent, with paid parental leave becoming more attractive in benefit packages, although I think that's driven by dads as much as by moms.
Yeah, but I mean, covering, for instance, fertility treatments, freezing eggs. Yeah. All of that is the rise of the woman, I think, in the workplace.
Absolutely.
All righty. And the Philadelphia Eagles might have more competition in the kicking position. Soccer superstar Carly Lloyd visited the Eagles camp and showed everyone why she is a World Cup champion. She kicked a 55-yard field goal.
Could she play for the NFL?
I'm sure she could. I don't see why she couldn't.
Wow.
That
is
man.
totally awesome.
That is great. Even if she doesn't want to play professional football, they ought to let her in a game and have her kick an extra
fun,
point.
yeah.
You know, just do it.
I mean, second career.
That's
Check
awesome.
that out.
Awesome.
All right, Tilray shares have seen more than half of their value go up in smoke so far this year. Did expectations get too high? We're going to talk about Tilray and what's battering the stock after this break.
We don't sell annuities.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
Phew! Currys PC World Mega Deals are hot stuff. You can save up to £150 on Samsung fridge freezers, all with a soothing 5-year guarantee. Starting from just $379 for the RB29. Or upgrade to an American-style model with £150 off the RS8000. And chill in the heat with its water and ice dispenser. A hot mega deal for a cool $999 at Currys PC World.
Silence the squawk. Find brand new cars ready to drive away today with Auto Trader.
The sun gently fell below the horizon. Rays of pure gold filled the sky, illuminating the towering structures of the London skyline. What else could Jane do but gaze in awe? She was but a silhouette upon a hill, wrapped up in a spectacle so perfect. No words, oil paintings, or smartphone filters could do it justice. She savoured it. Before hopping back on her bike and riding off, she had to finish her commute home. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
The 2019 MLB season is now playing on TuneIn Premium.
Swinging a line drive up the middle, base hit.
Featuring the home calls for every Major League Baseball team. MLB on TuneIn Premium delivers every exciting play from games around the league. From no-hitters to walk-off home runs. Catch the action all season long. Hear every pitch, listen to every play live all the way to the MLB World Series. At home or on the road, listen to the MLB on TuneIn Premium.
Are you tired of sound bites, clickbait, and gotcha journalism? On The Ezra Klein Show, award-winning reporter Ezra Klein gets deep inside the heads of policymakers, writers, technologists, and business leaders to understand what they believe in and why.
Yeah, because also, whether you're going to be nice to people or not, folks, the worst
for real conversations about things like climate change, the 2020 election, and the art of paying attention. This is the Anti-Soundbite Podcast. Search The Ezra Klein Show on TuneIn today.
Class stock Tilray up about 3% today after announcing its first deal to supply medical marijuana to Europe. But once one of the hottest weed stocks, shares look burned out, down about 90% from all-time highs when it was above $200 a share just last year, shortly after its IPO. So what is wrong with Tilray? Joining us on the Newsline, Rob Wertheimer, the founding partner and director of research with Melius Research. Rob, great to speak with you. You don't like the industry overall. You don't like Tilray in particular. And I'm just wondering, isn't this what the promise of these larger Canadian companies is all about, accessing the international market?
Well, that's for sure. So Canada has taken a lead in, being actually legal, and so you can sort of, expand and grow. And absolutely, the companies are doing an aggressive job with that. The issue is a little bit that, it's still uncertain, right? I mean, Europe is brand new. It's not really legal yet. There's just pockets of spots where you can start to sell. And we don't know who's going to end up supplying that market, in 2 and 3 and 5 years, right? So they're doing the right thing, but there's a lot of uncertainty with this expansion.
This expansion is specifically medical marijuana, and I'm just curious, Rob, how you think they are positioned, or any of these cannabis companies are positioned to actually serve CBD to the international markets, which may have a path of least resistance in terms of legalization.
Yeah, so right now, they're expanding their, growing basically marijuana in Europe, and we'll sort of see how regulations develop. And again, that's where that speculation comes in, where we haven't got, broad clarity on either medical or CBD in Europe yet. So I wouldn't say that, the pathway is yet 100% clear which way it's going to go.
Even if the pathway were clear, Rob, I mean, how ready are countries like China? I mean, China is growing marijuana right now. They're extracting CBD from hemp and from marijuana for export, for the export markets. Do you see that as major competition for some of these Canadian players?
In Jamaica too, yeah. I think actually, like in many places, cannabis has been, traditional medicine in China. So whether that's the main source of competition or field-grown crops in, Canada or the U.S. or elsewhere, there's just, multiple levels of uncertainty as you go through here. Now, people will want, especially for medical, people will want a security of supply. You want to know that you're taking a high-quality product that's been tested, et cetera. And so I don't think that we're in a race to the lowest common denominator necessarily, but I think what you just highlighted is, one of many uncertainties as we try to get there.
Do you have any buy ratings in this universe?
We do on Aurora, and we have, so as you mentioned, we have a negative rating on the industry. Just the last few months, it's volatile, right? I mean, you're basically just taking shots trying to get directionally correct, and we've tried to go with, someone who's got scale, leadership, ability to grow, and then, a little bit of execution. I think it's time for the companies to really start executing, or else we'll continue to see erosion.
Rob, great to speak with you. Thank you. Rob Wertheimer.
Thank you so much.
And Check Please is next.
Imagine giving your kid a healthy smile.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
In a world where everyone's on the move, streaming monster movies and mega box sets will gobble up the gigabytes on your mobile in no time. What you need is more data. Tons of it. Unlimited data on a new SIM-only deal from Carphone Warehouse. Unlimited data from a minuscule £23 a month. You want the world? You got it, baby. Pull a switcheroo at Carphone Warehouse. Vodafone 12-month contracts only ends 31st of December. T's and C's apply.
With a welcome bonus from the no annual fee British Airways American Express credit card, your next getaway's not far away. So whether it's welcome to drifting down the canals of Amsterdam or bienvenue to midnight strolls in Paris, say welcome to a European adventure. Spend £1,000 in your first 3 months of card membership and get 5,000 bonus Avios. That's enough to get away to Europe sooner. Search BA Amex to find out more. Representative 22.9% APR variable. Applicants must be 18 years or older, subject to approval. Terms, taxes, fees and carrier charges apply.
It had been 22 years since Dan and Tom last met, since they shared a desk in maths and played football together at lunchtime. 22 years with nothing more than a few Christmas cards and an online friend request to show for it. A 21st century eulogy for the loss of a once great friendship. Until a chance meeting outside the corner shop. On a morning they both decided to ditch the car and walk instead. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
The MLB is in full swing.
Looking up, and this one is up and out. A home run. Swung on and into the air to deep left. That ball is high. That is far. That is gone.
To listen, just search MLB Today on TuneIn Premium so you don't miss a moment of the games on TuneIn.
Markets are off their highs of the session, but still holding on to gains. And we mentioned this to you because it's sort of surprising as we watch the 2's10 spread compress today. We flagged this to you about a half an hour ago, but take a look at this. The spread is now just under a basis point here. So this is something to watch as we go into the close. We were up more than 1% on the Dow. We're now up 0.8% on the S&P 500. We've given up 0.2%.
Bingo. This is the markets telling you that even though, bonds to equities largely shrugged off the minutes, this is telling you they want more and they're going to push the Fed to do more.
It shows you, it comes back to that thing, all recessions have been preceded by an inverted yield curve, but not all inverted yield curves lead to recessions necessarily. But it is a telltale in many cases.
No surprise, financials are at the lows of the session, so very interesting final hour. Thanks for watching Power Lunch.
Closing bell starts right now.
And welcome to the Closing Bell. I'm David Faber in for Wilfred Frost in front of the Target Post, where the stock is up some 19% after better than expected numbers. That is a new high. We're, of course, rallying on the broader market as well with 59 minutes or so until the close.
Welcome, everyone. I'm Sarah Eisen. Let's look at what is driving the action stronger, up about 215 on the Dow. Fed minutes just out, emphasizing a recalibration rather than the start of a more aggressive easing cycle. Markets moving on that. We've just lost about 90 points or so in the last few minutes. And we're on the verge of an inverted yield curve again. We will dig in and follow every move. The CBO out today saying the deficit will increase more than it had previously forecast, quantified the drag on the real economy from tariffs. And as David said, retail strength, lows up 10%, Target up 20%, more signs of spending from the U.S. consumer. Joining us for the entire hour to break down the market action, Charlie Babrinskoy with Ariel Investments. Welcome. This is a Charlie Babrinskoy kind of rally day. Any great reason behind it?
The American economy continues to be 70% consumer. The consumer is in very good shape. Walmart had sales that were up almost 3%. Target, Home Depot, they're all showing strong results. It is very hard to have a recession when you have dropping unemployment, rising wages, and strong consumer spending.
And yet, some of the members of the Fed want to cut 50 basis points right now. Double what they did.
I don't think they're going to succeed. I think there were also almost as many who didn't want to cut at all.
Right.
And what those people are saying is we need to keep bullets in the gun, because this is not the time to be cutting rates in the middle of a strong economy. And frankly, I think that the president's tweets actually decrease the chance of a cut. Nobody on the Fed wants to look like they're bowing to his whim.
Lot to dig into today. Let's focus on the big stories we are watching. Elon Moyes on the Fed minutes for us, which are moving this market. Eamon Javers following President Trump's latest comment on tax cuts. Courtney Reagan is on the retail surge, and Bob Bassani looks at the other big movers in this rally. Elon, let's start with you in the Fed.
Well, Sarah, the minutes show three broad reasons for last month's rate cut. One, the slowdown in economic growth likely related to the ongoing trade war. Second, what the Fed called prudent risk management. And third, the fact that inflation is still running below the Fed's 2% target. The minutes also show that a couple of officials wanted an even bigger rate cut of 50 basis points. We know that one of them is Neil Kashkari. But moving forward, the minutes also showed that the voting members wanted to maintain optionality. That's a direct quote, maintain optionality in deciding when and whether to cut rates again, guys.
Elon, thank you. President Trump reversing course this afternoon on the possibility of new tax cuts. Eamon Javers has the details for us. Eamon.
Yeah, David, that's right. And the big question has been why the sudden change from the president. Yesterday, one tone on taxes. Today, an entirely different tone. Well, I think I have an answer to that question. I've been talking to officials in the West Wing, and what I'm told is that just before the president came out to talk to us reporters on the South Lawn earlier today, staffers briefed him on just how much traction his comments had gotten yesterday on taxes and all the speculation that had set off. And the president didn't want that to get out of control. So he said, I'm going to put a stop to that, and went out deliberately to talk to reporters just now in order to shut down the speculation that he's about to do some kind of major tax reform or tax effort of any kind, really. The president is, I'm told, always kicking around ideas on tax reform, but there's nothing happening with particular intensity right now. So that's why he said this when he talked to us about indexing capital gains to the inflation rate just a short time ago on the South Lawn.
I'm not looking to do indexing. I've studied indexing for a long time. I think it will be perceived if I do it as somewhat elitist. I don't want to do that. I want taxes for the middle class, the workers, the people that work so hard.
So the president's saying on indexing, he doesn't want to do that because it's for the elites. I asked him specifically, do you want to do any tax cuts at all? And he said no. So the president came out to deliver that message to us on the South Lawn, and delivered he did it.
Eamon, thank you.
You bet.
Sounds like for political reasons.
Well, somebody said he wasn't on his staff, then he said he was, and now he said he isn't.
Right. And the elitist, I think, is key, because the Dems are running on...
Right. The idea that you'd actually be lowering
rich.
capital gains taxes would be certainly something they could seize on.
We also got a pretty dire read on our fiscal position over the next 10 years from the CBO today. Not sure we need even more tax cuts. Anyway, retail, as we mentioned, a big spark behind today's rally as well. Courtney Reagan looking at which retailers are thriving. Courtney.
Hi, Sarah. So most retailers agree the U.S. consumer is strong, but the earnings reports prove that the consumer is strong, but also strong enough to be discerning. So they're not buying everywhere. Walmart and Target both beat analysts' expectations across the board, increased annual guidance, even despite upcoming tariff headwinds. Both have invested billions of dollars to better integrate their stores and websites to offer shoppers more choices, which are resonating. Home Depot and Lowe's, those are also winners, both benefiting from a strong home remodeling market. The home improvement retailer is also improving store and website integration. Now, Macy's had a wide earnings miss after some of its women's apparel missed that mark, so it had to deeply discount to sell it, which hit margins hard and subsequently the share price too. Sales at Tapestry's Kate Spade division far worse than expected. Investors now questioning whether a turnaround at that brand is really even possible in the near term. Coach was in line, but the North American handbag market in general remains muted, and Tapestry shares have sold off pretty sharply in the last week as a result. Over to you, David.
Thank you, Courtney Reagan. Let's get to Bob Sani now for a look at today's other notable movers. Bob.
And David, just off the highs, we're not quite moving in lockstep with bond yields as we have in the last few weeks. Maybe that relationship is breaking down. Take a look at a couple down movers here. Again today, for the second day in a row, some of the consumer staples names are weak in the last hour. So Coke's been drifting a little bit lower. Johnson & Johnson. This happened yesterday as well. Not sure this is the start of a trend yet. Not going to call that. I think banks are much more interesting. Still up today, but off their highs here. Yields have been all over the place. And as that 210 spread flattens and in some cases maybe even inverts, you can see J.P. Morgan coming off its highs for the day right now. Industrials still up, but again off their highs. 3M situation moving around about $2 from high to low today, sitting just off its lows. The key story today is we are trying to break out of the trading range we've been in all month, trying to get over about 2940 in the S&P 500. That would be a key level. Haven't been able to do that. Every time we get near it, a little bit of resistance. Remember the old high, 3,025, as I recall, the old closing high. We're only 3% away from that number. Guys, back to you.
All right, Bob, hard to believe with all the volatility we've seen lately. The Dow, as Bob mentioned, is higher right now by 217 points, so off the highs of the session with about 53 minutes until the closing bell. Still, you've got most groups higher and a pretty nice rally going on. We're also on yield watch again, on the brink of inverting for a second time in a week. This is a technical recession indicator. 7 of the last 7 recessions have been predicated by an inversion in the yield curve. We saw it briefly. We didn't see it close there last time, but we're watching the spread because now, we're under a basis point. And this is the reaction for the Fed minutes, I guess, David, that the Fed didn't indicate that it's on the brink of an aggressive easing cycle. It's sort of back the mid-cycle policy adjustment kind of stance, and maybe the market is pushing for more with these sort of lower yields and flatter curve.
Right, although we know that there are 2 members at least who believe rates should not go any lower.
Any lower.
And
so you've got that, and then
you got 2
that should go even lower.
Even lower
than they are right now.
Right.
So what does an investor make of all this? Let's bring in Alicia Levine from BNY Mellon Investment Management. What's your big takeaway from the Fed minutes?
So the Fed takeaway is that it was July 31st.